Good morning, students. Welcome to the class. Let me ask you one simple question. Why do we pay tax? Is it because we get something immediately in return? No. As you know, tax is a compulsory payment made by people to the government for the welfare of society, and there is no direct benefit for the payers. So today we are going to understand how the system of income tax developed in India. There are three terms: tax, fine, and fees. We know that fees is the payment made to get a direct service, and fine is nothing but the payment made for towards the punishment, and the tax is the payment, compulsory payment made by the people for the welfare of our people. And we also should understand that tax is a compulsory payment, and the burden of the tax payment may be fall on different people. That is called incidence of tax. Let's go back to the history of income tax. As you know, the British government started income tax in India in 1860. Sir James Wilson was the person behind the implementation of the new tax structure in India. He was the person who also presented the first budget of India, also restructured the India's financial system. Why the British government started a income tax act in India? Because there was a huge financial loss due to the first independent war happened in 1857. Then, as we should understand that the tax in India started as a crisis solution, not as a planned system. Now we have to understand the step by step implementation of our Income Tax Act. As you know, as I already stated, the British government passed a new Income Tax Act in 1860. After that, in 1918, the British government brought a new Income Tax Act. In 1922, there was a structural reformation. During the 1939 and 1956, there is almost 29 amendment. After the independence, India government constituted a new committee under the chairmanship of Sir Mahavir, and the committee is called Direct Taxes Administration Inquiry Committee. They submitted their report in 1956. Based on that, India government passed a new Income Tax Act in 1961, and the act came into force on 1962 April 1st. Even today, our tax system is based on Income Tax Act 1961. So there is a question: who have the right to collect the income tax in India? Here, the union government have the right to collect income tax, and there is a apex authority for income tax. It is called CBDT, Central Board of Direct Taxes. Then every year, our financial minister present a bill in the parliament. Based on, there will be a financial act. That act describe the tax rate for the upcoming financial year. Here we have to understand the concept of income. As per the Income Tax Act, there is a very clear definition regarding this matter, and everything like salary, business income, rent, capital gain, lottery, and other things also comes under the definition of income. Even the illegal income is taxable, and income may be in the form of cash or in kind, and income may not be a regular one. That means seasonal income is also taxable. We should have a very brief idea about different heads of income. There are basically 5 heads: salary, house property, capital gain, business or profession, and other sources. All these together form gross total income, GTI. And here there is a special term that is called total income. Then it is also called the taxable income. We get taxable income by deducting all the deductions from gross total income. That means total income is equal to gross total income minus deduction under section 80C to 80U. When come to the end of the today presentation, dear student, we should understand that tax is introduced in India in 1860 due to the financial crisis, and it evolved through many laws, and the current system is based on Income Tax Act 1961. Tax is not a burden, it is a contribution to national building. Thank you.